Welcome to the Same Day Podcast, where we discuss driving incremental business growth and other topics related to real estate, property management, and entrepreneurship. Now to the show at hand.
Mat Zalk here. I'm the host of the Same Day Podcast, where I connect with top business leaders and real estate experts. Some past guests include Mike Bosch from Untitled Capital. Corbin, we can have your dog on at some point. I recently interviewed Chip Gabarino from Topeka Coffee in Hodges Bend. Great conversation about real estate and what he's doing in tax credit properties and just being an entrepreneur in the entrepreneurial spirit, something you know a ton about, Corbin. We can get into that. This message, today's episode, I should say, is brought to you by Keyrenter Property Management. Keyrenter Property Management, we're a full service property management company helping our clients buy, renovate, and operate real estate assets. We help our clients build wealth while taking the headache out of property management. Corbin, you have managed properties for a living in your life, and you understand the nature of the work. It's difficult stuff, but there are a lot of moving parts, and we try to do everything we can for our clients to make it as seamless as possible. Sometimes they need to fund an account, but other than that, they can lean back and collect the rent in their bank account and do nothing else. We really do try to make it so that they can build passive income, and we just do anything to take the headache away. Sometimes we pay mortgage payments, sometimes we pay property taxes, sometimes we pay insurance bills, but whatever we can do to make the headache ours and not theirs is what we aspire to. That's why it doesn't matter what rental you have, a single family home, a condo, townhome, apartment, we've got the management solution for you. Go to KeyrenterPMC.com, info@KeyrenterPMC.com if you want to ask any questions. So Corbin, you and I met so many years ago at Dilly Diner. And I don't even know how we got introduced. Do you have any idea? Was it Kyle Collins, maybe, who's a local real estate investor and appraiser? Did he introduce us, or did you introduce me to him?
No, I don't think I know him.
I kind of have a feeling that you like cold emailed me or something. And I was just like, I like this guy. Let's go to lunch. And I like have the sense that that's how it happened, but I can't really recall.
I might have just called you or sent you a text. I feel like maybe at the time I was connecting. I think was I at Keller at the time?
I think you were, because I was going back and I looked at some emails. What's funny is I looked at some emails and you were at Keller. So you see Marcotte at kw.com. And then we had that first deal on Independence, the Kelly Apartments. I want to talk about that a little bit. That was funny. But before we go into it, let me just introduce Corbin Marcotte. A big shout out to Corbin, who's made himself a name in our market in Tulsa, Oklahoma, buying and selling real estate. Corbin's the owner and the principal broker at the Investors Broker. He owns a bunch of Airbnbs. And I think you've transitioned basically from long-term rentals mostly to Airbnbs. Is that right?
Yeah, that's currently the model. Yeah.
You bought your first house at 16 years old. That's pretty impressive. I want to get into that. But before we do that, let me just ask the first question, because when I met you, the first time you and I met, you were still in your cape. You're still wearing a cape. I suspect at 16 years old, you weren't wearing a cape, but tell me, how did the cape come about? Everybody still knows you as the caped broker or whatever, caped agent or whatever it was. But what was the origin? What happened? Why'd you stop? Tell us the backstory there.
Yeah, that's funny. I was always kind of weird, and but the thing was so I went through all this stuff in my life. I had, started buying property when I was 16, building this business, completely losing everything I had built up, just by being a moron. And then kind of happened, I hit this point in my life where this was after I built up and then withered away everything I had built up. And it was the real rediscovery, and so at that time I started getting into meditation.
Mm-hmm.
And I started I picked up this meditation book. I was kind of in a dark place mentally, and I picked up this meditation book, start reading meditation book, and I start having all these realizations. I start really digging into who I am and everything like that. And a big thing I realized was how much I cared what other people thought of me. And how it was this big weight I was carrying around, which I was 20, I was 23 at the time, 22, 23, something like that.
Yeah.
I had this realization of like, oh my gosh, like I stress out and I care what people think of me. And so I thought, I was like, and it came to me in a meditation. And it was like, what could I do that would dissolve that fear?
Cool.
Like, that's the thing that I saw holding me back the most in life. Come to find out, it probably wasn't. It was something, it was on the playing field, you know, of things holding me back from being who I wanted to be and doing what I wanted to do. And so I was like, what can I do that will completely dissolve my care of what people think about me? And I was like, do something absolutely ridiculous that just you can't even bear the idea of.
Wow.
And like the idea of wearing a full length, I ordered it from some lady, I think it was like called like Super Cakes or something. She makes cakes for like kids, but
Love
adults.
Love it.
And so I was like, that is the most embarrassing, terrible thing I can think of doing. And so I bought one. I got it branded, you know, because I had been a real estate
What was the
agent
brand?
Keller Williams. I had my Keller Williams team. I changed the name of my team to the Cape Agent team.
The Cape Agent. That's right.
And another a small factor of that was at the time I was listening to some Grant Cardone stuff.
Yeah.
Like I think a lot of 22-year-olds do.
Was he big in multifamily back then, or was he on the single family train?
No, just straight sales at the time.
Okay.
And this was before the real estate stuff. And but I was trying to learn to be a good salesperson. That was my objective in life at that time, was I wanted to learn to be a good salesperson.
And you didn't want to, you weren't listening to Zig Ziglar?
I did listen to Zig. I listened to all of it.
Yeah, I love him.
I'm a book junkie. So, but Grant Cardone had said something that I really appreciated at the time. And thinking about sales, being a young person trying to sell real estate, don't have a lot of relationships built.
Sure.
Moving into Tulsa from Claremore, so people don't really know me. And he said, your greatest issue is obscurity. Mm-hmm. People don't know you exist. If they knew you existed, they would use you. Mm-hmm. And so I was like, I'm a Donald Trump this. I'm going to make half the people hate me and half the people love me. I'm going to do something so ridiculous that it's going to just, you know, it drove people. And I mean, it was very effective.
I mean, I still hear about it. That guy that used to wear the cape. I'm like, yeah, it's been, when did you stop wearing the cape?
I wore it. I basically made a promise to myself that I was going to wear it for a year straight.
Got it. And you did, like every day you'd get up, it was just your uniform. You'd just put on the cape and you'd walk around all day, and people would be in Starbucks looking at you like you're a lunatic, and they'd ask what's going on.
Yep, every single day. I mean, there were.
But work days, or you were like weekends, you were still rocking?
Like, I mean, I wouldn't wear it to like the gym, you know, because it's hard to work out with a cape on. It's a very ineffective superhero tool. But
flying. I mean, the fact that it makes you fly is the part that works. Everything else is a nuisance.
Is it the cape that makes them?
What else? Is a cape? Oh yeah, perhaps. I always thought it was a cape that makes them fly. That gives lift over their back.
I thought it was the ability within a minute.
That's true.
Change direction. You know,
something needs to propel you forward. Yeah, and create the thrust. Yeah.
You understand aeronautics? It's like what do they call those things on the plane wings that tilt back and forth?
Your ailerons.
Yeah. That's what a cape is. But yeah, I would say 90%. You know, 10% of the time I was like, I'm exhausted.
A couple of funny things. I saw Wayne Coyne from the Flaming Lips years ago give an interview, and I was at oh my God, this is so far back. I was at Vegas, the first year of Vegas, which is a Las Vegas music show, and I was at UC Santa Barbara, and I don't want to say I forged the documents, but I presented myself as somebody from the Santa Barbara campus newspaper, and I got media credentials. So I got, backstage access and a free pass and everything else. So I was listening to Wayne Coyne talk. Somebody asked him a question about why he does, I don't know if you've seen the Flaming Lips, but he might come out inside of a ball singing, a big blown up ball. He might have a microphone camera, so it stares right into his mouth, and a big projector on the back presents that. And they were asking him why he does it, and he might squirt stuff onto the audience and, throw fake blood around. I think fake blood might be a little bit grotesque or gruesome, but maybe not that extensive. But he does all this stuff, and somebody asked him why he does it. His perspective was, if I'm the weirdest person in the audience doing the weirdest stuff, then you're not concerned about whether you're dancing the right way or whether somebody's looking at you funny. You're just enjoying the music because I'm making the show. The presentation is here and I'm the weirdest person in the room. So I thought that was fun. And it is a little bit like, anything that you can do to break the ice for somebody to walk up to you and be like, what do you do? What is this cape? And then it fights the obscurity, as you said.
Yeah. It actually, it got me, I don't know, 1 or 2 listings, but in its actual formation. But the beauty was it made me stop caring. Like when everybody thinks you're an idiot, it makes you realize that people judge you based on your immediate look.
Yeah.
And not based on your story or who you are or any of that stuff. People have this very surface level knowledge of who you are. And they make all their assessments off of that. Yeah. And, they didn't understand my knowledge or anything like that. And so it kind of broke that barrier of people are just judging from their spot, not from really any actual knowledge, and so it helps you release a lot of that. And that perception change got me a lot of business, that idea.
What kind of meditation were you practicing when you first started, and have you continued with that same type, or have you moved on to something else?
I've changed it up. I've never even known like a label for the meditation I've done or any type. I picked up a book. It was weird. It kind of happens since, Sure. But it was sitting in my closet. Like I said, at that point, I'd lost like everything I'd built up. I had to move back in with my mom, and I'm just like in this miserable state. And in the closet of my oldest brother's, I moved into my oldest brother's room, and in the closet, there was a book, Meditation in a New York Minute. And it's funny because my oldest brother never meditated or anything. So I don't even know where this book came from. Nobody in my family ever did. And just picked that book up and started reading. And I ended up going to a meditation school years later where I spent like 18 months straight.
Wow.
Doing these rigorous meditation exercises and getting really into it. And I still definitely try and carry it on. I've been inconsistent over the years, but I find it myself going back to it's one of the most beneficial things I can do.
It's so hard. I mean, that's one of the great exercises of it's not the destination, it's the journey. But it's so hard. My mom meditated for 50 years or something, and I tried at various times in my life. I found it very difficult just to slow down. If your brain works real fast and you're constantly thinking or whatever, especially for entrepreneurs that are working on their business, it's just hard to kind of slow down. But it's a super beneficial practice, no doubt. Tell me, so how did you end up buying a property at 16, and what was the upcycle, and then how did it crash?
It was, so I was like a very mischievous youth.
No way.
Yeah, right. And I just started like, it stemmed from like my oldest brother. He got me into a bunch of trouble as a kid. When I was like 14, when I was probably 13, I was selling drugs. Wow. I mean, I would sell pills. I started smoking pot when I was like 13 years old.
Medicinal.
Right. Just being a rowdy kid. And then, when you're a kid, you fall into the wrong groups. I start hanging out with all these losers. Things get worse and worse. And I get caught by my parents, and my parents were very strict. My parents, I never saw them drink or anything. Wow. I mean, they were very straight-laced and good parents, really cared about me. But, I got in a bunch of trouble from them for sure. And at that point, I'm in my adolescence. I was 15 years old when I got caught with everything. So I'm in my adolescence, and I'm like, I can't stand being told what to do. What most people do in this world doesn't make any sense to me. I was always a smart kid. Like I was gifted and talented and shit like that. And like, but then I get in all this trouble. I decide I want to get rich so nobody can tell me what to do.
Makes sense.
I partially influenced, like my brother brought it up that got caught with me. And I don't know how that happened or who influenced him. But then I had this idea, I want to get rich. And then I have a conversation with this guy, and it's funny because just random person. This guy's, nobody in particular special or anything, but was my oldest brother. He had ended up going to jail. So he goes to the army.
Wait, your older brother? Who went to jail? The guy that...
My oldest brother.
Got it.
Yeah. And on the way to get out of the whole situation, he joined the Army, right?
Yeah.
And that's what people used to do. So he, on our way to see him graduate basic training, one of his friends, I was telling him I wanted to get rich, and he was like, well, like, how are you going to do that? And I was like, I don't know, like a 15-year-old, all I know is like doctors and lawyers are rich, in my opinion, right?
Sure,
I have no idea.
Sure.
And he was like, well, who's the richest guy in the world? And I was like, I don't know. And he was like, Warren Buffett, here's his book, tells me about it. So then I buy The Warren Buffett Way, and I start reading that book. And then I start down this. So I realized, like, oh, I'm actually fascinated by this stuff. I'm not fascinated by the stuff happening in school.
Yeah.
So I start reading a ton of books. I read, all the major ones. And I start buying stocks when I'm 15 years old.
From the pill money or from what?
No, I always had a good work ethic. My dad was a really hard worker. I worked on a farm since I was like 11 years old.
Got it. So you stockpiled some cash and you started investing in blue chip stocks.
Right.
Apple computers.
My dad started a lawn mowing business because he was a Tulsa fireman. Mm-hmm. To keep me and my brother out of trouble, he started a lawn mowing business so we wouldn't do stupid shit during the summertime.
Sure.
So,
besides getting heat stroke.
Right, yeah. And so we made a chunk of money, mowing lawns. He shared the profit with us well. And that was my first sales experience because we only had a couple customers, and I would go door to door knocking to people who had tall grass and ask them if they wanted us to mow the lawn.
Sure.
And so saved up some money from that, started buying some stocks. Well, this was 2008, 2009. So Warren Buffett's philosophy, buy a good company in a bad time. Everybody was in a bad time. Yeah. So I just started buying good companies and, bought GE, Ford, American Airlines, a whole slew of them. And all of them like tripled in price in the matter of a year, basically. And so me and my brother realized that, we weren't going to get where we wanted to go through the stocks because we just didn't have enough capital to invest to make the return. So we loved real estate, the idea of real estate because of leverage. You can really multiply your money with leverage. My brother was 18, I was 16. We went to a Robert Kiyosaki seminar, in downtown Tulsa.
I love that.
And on flipping houses, I bought the upsell, the $250 upsell. Yeah. And then they were trying to teach us how to finance the whole $30,000 thing or whatever on credit cards. But my brother I don't even think he was 18 yet. I think I was still 15 and he was 17. So we couldn't even get credit card. So I was like, dude, we can take what we learned here and we'll figure it out. Drove around, found an abandoned house. I know how to use the internet, which was a huge advantage at the time. Nobody used to be able to find phone numbers because I was a 15-year-old, so I knew how to use a computer.
Yeah.
The older people didn't even know how to do that, So I found this dude's phone number online, get a hold of him, bam, bam, bam.
Is this in Claremore or in Tulsa? Where was the house?
In Claremore. Okay. Me and my brother buy it in cash for $8,000.
Nice.
Or $7,200. I knew that I was on this path, so I started working for a construction guy to learn all the trades and learn construction. And so me and my brother flipped this house together. That's how it all got started.
And so you rented it out? I mean, you were managing the property yourself?
Yep, flipped it and turned it into a rental. Cool. We tried to sell it off the bat, but we weren't going to give what we wanted, which looking back, it was a great offer. We totally should have, but we just didn't know what we were doing. We rented it out for the next several years, used an equity loan on that house to buy another house. And that first house took me 2 years to flip. We couldn't get a loan because we were 18 and 16.
Sure.
I worked like 80 to 90 hours a week at a gas station to save. I dropped out of high school. I worked like 80, 90 hours a week at a gas station, saved up every penny I had, dumped it into that house. And then often I would get off work and go work on that house.
Wow.
So it was brutal, and we fought through it to get through those 2 years. And then turned around, by that time we were able to get an equity loan on that house. use it to buy and flip another house. So we turned into a rental for a little bit. Yeah.
Wow. And then how did it all come crumbling down?
So 20 years old, finally like, okay, time to move out of my parents' house. I'm back into being a degenerate. 20, I read and it's funny because I'm starting to learn like how important balance is.
Yeah.
But at the time, I went so hard for so long.
You need an outlet.
I woke up one day and I was like, I have no friends. Like, I dropped out of high school. I don't even know anyone. Like, I don't have any girlfriends. I don't have any friends. I'm like, I'm lonely, which I don't fully recognize that. But I'm like, I got to make friends.
Sure.
So I go to college in Claremore, non-degree seeking. I already know I want to do business stuff. I was like, I'm going to go to college just to meet people.
Yeah.
So I do that. I was like, I'm going to get the job at the place where the dumbest people on earth work, Lowe's Home Improvement. So I went and got a job at Lowe's and started working there just in a much more chill environment. Quit working so hard. I was still flipping that house on the side, but I started making friends, and we start, college days, drinking, acting crazy, having a great time. It was a blast. But it was so then it was like a rebound. Like I went so hard working, now I
pendulum swung
the other way. Yeah. And was not balanced. Turned 20, we sell one house. Me and my brother sell one of our houses. We move into that first house that we fixed up, and we had a roommate paying for our mortgage, so we lived for free. I'm 20 years old. He's 22. We lived for free in a house that was very nice. I mean, it was a great house. So everybody was like, wow, this house is so nice, It's being paid for. We have like 50 grand in equity in it. And we're partying all the time. Well, and like the week or 2 weeks after we moved in there, my dad dies.
Oh.
So, I mean, just this whole slew of, now I look back and I'm like, oh, it all makes sense, but so then we really go off the rails. We start drinking and partying all the time, and just, it was a disaster. So a year straight of virtually not working at all, and blowing through the money I had in my bank account.
And then did the bank actually foreclose on the property or what?
No. We had plenty of equity, so we sold it and took some cash out. So we were able to survive, but we had kind of dug ourselves in a hole. That all ended with me almost going to jail.
Okay, not quite.
Go to jail, but I talked to the police officer out of actually physically taking me to jail, but got a ticket that resulted in
your sales skills came in handy there.
They did.
So speaking of having plenty of equity in a deal, you and I think early in our relationship, must have been 2018. I think we ended up buying this property in March or April or May of 2018. But I had this email in front of me that I wrote to you. I said, Corbin, the details are fairly sparse, but it would look something like this. 28 units, 13 are occupied. Rents are $450 for a 2-bedroom. Landlord pays water, trash, sewage, plus common area utilities. Needs about $150K worth of work. 7 beautiful red brick buildings, new scuppers, 10-year-old flat roof, no leaks. Property's under contract, and it could probably be assigned for $725. So I took this property under contract for $525, and I was like, this deal is so good. I can probably flip it for $200K, and the person that buys it will still be in a pretty good position. Had they done what we did, so we ended up so you brought some buyers by, they ended up not liking it. The neighborhood was a little bit rough. At $725, they'd put in, let's call it $200. It had been in it for $925. They'd operated properly. They would have sold it some years later. We ended up being in it for $525. We put in $300, so we made it nicer. We're in it for $825 total. I think we had about $180 or $200 of cash in it, all in, maybe less. And we just sold it for $1.5 million. So they would have still been in pretty good shape. $925, they would have been at $200. They would have cleared a good almost $600,000. Have you talked to that? Did you ever do anything else with that potential buyer?
Man, that is still the best apartment deal I've seen to this day. And I wish, like, at the time, I got out of essentially. I always had my toe in the water, but I was like not fully focused on investing at the time.
Yeah.
And so if I knew or had the know-how or like felt it possible at that time, then I would have been all over that deal, because I was like, man, this is sweet. And he backed out, because he actually put it under contract for a second, and then he backed out. And I'm a very straightforward person, and I was like, dude, that was like, I understand, and like I'll help you with other properties and stuff, but I want to let you know, like, that was a terrible decision. Like,
what's funny is at the time,
solid.
I was like,
he hated me.
He'd hate you no more if you knew that that he could have cleared $600,000. So we ended up pulling like $850 of equity out of the thing, all said and done, I think, and we just exchanged it into 10 new build homes, which is cool. So we took like 16,000 in top line revenue, or 16.5. We'll convert it into, I think we end up closing on them end of this month or early July. We'll probably get $23,000 of top line, maybe 24 if we're lucky, if the market doesn't drop out here. But I thought at the time losing that upside of $200,000 I was like, man, that would have been nice. But in hindsight, I'm so glad that it didn't happen. Right. I mean, we put in the hard work, we managed it for a bunch of years. We got it stabilized. Units are super nice. I still think the guy that bought it for $1.5 million has plenty of upside in this thing. I mean, he can make it some Airbnbs out of them. He can make them even nicer, fix the stairs that were done, charge for parking. I mean, doing some serious upside, which is nice for him also. But that's the first deal. I mean, you just did. You now work with a bunch of guys. You have so much stuff. You're doing your own real estate. You're doing brokerage yourself. You're also working with a roof stock. Yeah. And you're their exclusive agent in the market. Is that right?
Yeah. I'm the broker. My partner Garrett is their primary agent. Yeah. So he handles all of their transactions that come through Tulsa, which is basically, for people that don't know, it's a platform where out-of-state investors can buy investment properties online. Yep. And they guarantee the rent. And even I saw an example where they bought a property back from somebody because
at the price they paid.
Yeah. Yep.
And they refunded the commission and everything.
I don't. That one, the person had bought it without the agent.
Yeah.
But yeah, they bought the property back because the guy wasn't happy with the transaction. So I was very impressed. They stood by their word. And they guarantee the rent, and they
how long?
They make it very turnkey, is what they do. How long? What?
How long do they guarantee the rent? And for the duration of the contract that's on the property, the lease that's on the property?
No, I think like they do a 90-day guarantee or something like that, stating that the rent that was quoted to them, because part of it is the agent, Garrett, goes in there, he finds these properties, and he says, this is what I estimate it'll rent at. And then they verify it, property manager, once they're under contract. And so they're saying that rent that you were quoted, we guarantee you can get that within so long.
Wow. Cool. And so tell me, you recently you sold a property to a 20-unit apartment complex to a guy that syndicated the deal. What was that like?
Yeah, it's nice at this point because I just have people that call me, and people that know me. And I got a call from a property manager that I know, and he said, I got this 20 unit. You got somebody that'll buy it and needs some work, here's the setup.
Is this out in Sand Springs?
No, it wasn't. Okay. It was in North Tulsa. It was north of 244.
Yeah.
Not too far north of 244, but it was easy. Made one phone call, ran the numbers, got it negotiated.
And what did it transact at? What price?
I don't remember exactly. I think it was like 800 and some change.
Okay. So 40 a door, something like that. 40 a door, and does it need work to get up to speed?
I think it was pretty much fully occupied. There were a couple vacancies. Many of the units were, as you know, that area, very outdated.
Yeah.
Rents could be raised.
Yeah.
And, I need to check back in on it, but this guy, he loves value add stuff.
Sure.
So he's going to do some renovation on it, and probably, I imagine, be able to up the rents decently. And I think he's going to do well on it.
And so he syndicated the deal. He acted as a general partner, and he just brings in a bunch of LPs, or does he bring in one LP that, like a family office or something that'll just finance it?
It depends on which deal he's doing. This one was smaller, so he may have just had, one or two.
Yeah.
But I know he does some real large transactions, and so he has, he sends out the regular emails talking about deals and what their opportunity looks like and everything like that. So it's nice working with real experienced people like that. It makes it easy.
I mean, then they're not BSing you. They don't have, it's not like their models are silly and they're over ambitious for what they, both what they won't spend on renovation and what they will get in rent upside. I mean, it's nice working with people that have done it a lot.
Yeah. And just, the reason I called him is because we were under contract on another, I think it was 48 units or something like that. And, he was in, they were a mess. I mean, they were crazy. You know which ones I'm talking about, but I'm not going to say names. But they were a disaster.
Yeah.
And I've never seen so many roaches in my life. But
the worst is when you open a door and they come down on your head from the top.
Dude, that was that place. I was like, I'm not going in this. Like, I won't go in there. It's just, when they're raining off the ceiling and it's 3:00 in the afternoon, you're like, this is not good.
Yeah.
But and I mean the gang banging stuff that was happening in that complex, homeless people just sleeping in the middle of the courtyard. It was crazy. And we were under contract on that, and he came back after we did the entire inspection and said, here's the numbers it's going to take to get this thing up.
Yeah.
And I was like, and the seller ended up busting it and all that, but it was totally reasonable. I was like, this guy's not trying to overfluff. He's not trying to work one over. He was like, here's the reality of the situation. And I was like, I appreciate that,
Yeah.
That deal didn't work, so I brought him another one because I was like, he's not trying to, some buyers try and gouge and things like that or take advantage of the situation. I felt he was very reasonable. And there was not a thing that I was like, oh, he's crazy on that. It was like, this is exactly what has to happen, and he was willing to work with it as long as he could make it work. But the numbers were just off, and it was presented as it wasn't in that type of condition. So, it was more on the seller than it was him.
Was this a recent transaction? The 20 unit, was it recent or last 6 months? How did it?
Last 6 months.
So what are you seeing in the market? I mean, you guys are looking at roof stock stuff. You see that all that transaction, that flow come through. You sell other stuff to other people. How are you? Yesterday the Fed ticked up interest rates 75 basis points. We're certainly seeing a slowdown in our business in terms of new management contracts signed. Feels to me like people are just waiting, and we're at this. We've come up. We're here, and now people are kind of waiting for the crest to actually take place and for prices to start dropping or flattening or whatever. Are you getting the same sense, or what are you feeling?
Yeah, that's a lot of what I'm feeling. I mean, we're still transacting stuff, and a fair property's still gonna sell. But you can see, and a lot of people, it's kind of interesting because I was a traditional agent. I still help some friends with traditional sales.
Sure.
And I keep my finger on the pulse of all that stuff. And so many people are like, "Oh, I'm seeing days on market really extend," and I'm like, "Are you?" Because, the neighborhood I'm in, this person down the street listed their house for way more than what anything's ever sold for.
Sure.
And it's sitting on the market, of course.
Sure.
They've done $2,000 to $10,000 price drops because they know they were being crazy.
Sure.
Stuff like that's sitting on the market. But if you look at it, the average days on market in Tulsa is still 6 days.
Wow.
So, I mean, but at the same time, I do feel that people are starting to, it's interesting because I think I'm selling so much investment properties that I don't think I see it here as much. I don't think investors have necessarily slowed down. I could be wrong about that, but for my field, they're buying just like they. But I deal with a lot of cash buyers and things like that. So that's still happening. And I don't know your experience, but I'm still, commercial loan rates are not much higher. whereas traditional mortgage rates are.
What are you seeing in the commercial? What are you seeing in the commercial space?
I'm still around like 5.5.
Yeah, same.
So nothing.
I mean, I haven't looked at anything since yesterday's rate hike, but that's what I've been seeing also. 5.25, 5.5.
Yeah.
I mean, in fact, I was hearing commercial terms quoted at the same price as 30-year fixed, which I don't understand fundamentally. I don't get the economics behind that, but I was shocked that you could get them at the same rate.
Yeah, I know there's a big transition of a lot of companies and large companies are transitioning into real estate. So I think the banks still see the commercial, the investment style, business style real estate as a sound investment, And so I don't think they want to necessarily scare people off of that. Yeah. But at the same time, if you look at I think the status in the past month, there's 30 or 40% less mortgage applications that have happened than there was 6 months ago.
Yeah.
So
Fannie and Freddie came out with something recently that said their applications are down huge, lowest since
and
2018 or 19 or something.
Traditional buyers are getting priced out of the market. Yeah. I mean, that's what I'm seeing a lot. Traditional buyers are getting pushed maybe out of Tulsa into smaller towns around with a little lower price.
Yeah.
So that they're willing to up their commute, which is dangerous in the gas crisis going on right now. Yeah. But they're willing to up their commute to be able to live in a decent place,
But I mean, it seems like there's so many institutional investors that have come in. You've got SFR3, you've got the Epic guys, you've got TB Realty or TB Real Estate, you've got Chris Crone. I mean, they're all, some of them are institutions and some of them are just sales machines that bring people in and teach them how to buy real estate and then facilitate the transaction. Just there's so much, forget Blackstone and BlackRock and Goldman and everybody else that's funding it. You have so many small medium players, people that have 5, 10, 15, $20 million funds that are buying real estate, just compounds the effects. And everybody that wants to buy their primary residence is competing now against mom and pop investors like our clients and institutionals who happen to be, many of them our clients, but institutionals that are gobbling them up 10, 12, 15 at a time. And I went to the tax auction 2 days ago. I didn't see you there, by the way. Were you there?
No, I don't participate.
It was, 1,400 properties. There were 950 of them that got paid off before the auction. So there were only a couple hundred properties being auctioned. It was insane. I mean, people just bidding up Northside houses to $50,000 and $60,000 and $70,000 that need $60,000 and $70,000 worth of repairs. So
that's why I don't go.
It's just crazy. I mean, it really is nuts. But I think a lot of it's driven by people with purse sizes of $20, $30, $40 million that are just gobbling up real estate.
Man, and the amount I don't like it kind of in the single family space. This is a dramatic thing that I think people overlook. Like, dude, it's not the big company. It's Jill that calls me from California and says, "Hey, I'm moving out of California and I want to buy a primary and a couple other investment properties in Tulsa. Sure. I just need a place to set my money and let it appreciate." And dude, how many, some of my agents and my brokerage handle some traditional transactions. And how many of them have called me and said, "Dude, we've been beat out by 20 cash offers. People from California and Colorado, places like that, moving out of there, coming to Oklahoma, and they're buying not only a primary in cash, but they want a place to set their cash." This lady called me the other day. "Hey, I want to buy two," and she gave me some really high numbers for Oklahoma. She was like, "I want to buy two $400,000 duplexes." And I was like, "It's hard for me to find a $200,000 unless I go to Edmond, the richest zip code in Oklahoma."
Yeah.
It's, these people are just like, and her thing was, "I want to buy them. And she said, "I don't care if they cash flow. If they can sit there and pay for themselves, when they're paid off, I'm going to give them to my kids."
Yep. And it's better than the money sitting in the bank losing 15% a year.
Yeah. Yeah. And these people are moving from these places where the price of real estate's been so high for so long. Sure. And then they come to Oklahoma and they're like, $500,000 gets me what? I'm living the life of luxury.
Yeah.
And I can throw some money at some other things and still be able to afford to travel. So it's a lot of those individual people, man, I mean, hundreds of them that my brokerage deals with that are just trying to buy one or two.
Sure.
But that multiplies so much, you know.
I mean, it's true because you've got all the big players, you've got thousands and thousands of small players that aggregate to being bigger than the big players, and you just have a tremendous outstripping of supply.
I think it's more of they're more messing with the single family, the Cosmopolitan just transacted, you know,
sure.
biggest transaction, but that's like that's not affecting single family.
Sure.
And I'm sure in some way it is, but not like all these regular buyers, all these regular people. Just, the amount of times I've got a call, I want to buy my first investment property in Tulsa. I mean, so many, you know.
We get the phone call that says, I'm looking to build my team. We'd like to meet and interview you to build a team. And I'm like, buy a property, call you plenty of time when you get under contract. Get under contract and then give me a shout and we can have a conversation.
Yeah.
Right?
Yeah, I'm investigating Tulsa.
Yeah.
Yeah, I'm investigating.
Welcome.
Yeah.
Welcome.
But hopefully doing things like podcasts and things like that. I know I did a podcast and I get so many calls off that podcast, but I think putting stuff like this out there kind of educates people a little bit more to where they're comfortable in the market, you know?
Yeah. I mean, that's what I say to all those people that say, I'm investigating Tulsa. I say, come to Tulsa, drive around with us. You can look at some of the projects that we're working on. You can meet Corbin. You can look at what real estate costs, and then you'll have a good idea. So when Corbin says to you, hey, this is a good investment, you've already met his wife, you've already met my kids, you have more faith and trust, right? I mean, because we get 5 of those phone calls a week for the people that actually want to do it. They'll come to Tulsa and they'll drive around for 2 days and they'll understand the market and they'll understand the demographics and they'll understand the nature of the real estate, you know, and be
and almost no one that actually has shown up doesn't buy something,
right?
Because they're like, oh, this is a legit place.
But it's self-selecting. Those are the people that are going to buy anyways because they're the ones that are willing to spend the money to make the trip to stay in a hotel and, you know, understand the nature of the market. What are you reading today? What are you gaining insight from? What podcasts are you listening to? What conferences are you going to? What's everything?
Man, my favorite real estate stuff is Ken Mcilroy.
What's he talking about?
His YouTube channel he's so much smarter than me. So it's easy to watch because he knows, he's so resourceful, you know, big multifamily guy. I mean, he wrote the ABCs of real estate investing forever ago. I mean, just so well at explaining things. And I mean, breaks everything down. He's breaking down the recession coming. He's breaking down how he believes that we're going to turn into a renter nation. Things don't change if a shit ton more houses are not built to fill the supply and the demand stays where it is, as well as traditional people being pushed out, like we're talking about with the hike in interest rates and the hike in, price of homes, the sales price, how much it's increased over the past year. He showed something that the average increase is like, and we're not experiencing it so much here like this, but the average across the U.S. is like an $800 a month difference from today to a year ago because of the interest rate hike and the prices going up. In terms of
the mortgage on a single family residence, or something.
The mortgage payment, So, and that's not to count the taxes and insurance that have gone up.
Sure.
So, people are spending almost $10,000 more a year, and they haven't got the $10,000 a year wage hike. So it's pushing us into a renter's nation where a lot of people are not going to be able to buy. They're going to have to rent. And, that's good and bad. We want America to be homeowners. We want the average American to be more wealthy because that's better for everybody across the board. But that makes rentals in high demand. So there's a lot of factors to that. But that's probably my favorite right now. In the real estate sector for sure.
Yeah. Anything else you're reading or watching?
I'm always doing a bunch of self-work, trying to learn all kinds of stuff. I just read the Cameron Haynes book, Endure.
What's that about?
He's a bow hunter and an ultra marathon runner.
Wow.
And so he does like those 240-mile marathon races.
Oh my God.
Where you're running for like 2 days straight.
I mean, does he sleep? He stops and sleeps, or he literally runs for 48 hours? I mean, he just gels.
Like run for like 48. Dude, it is insane.
Oh my God.
It's unbelievable. These are like some of the hardest men on earth. But that's a really interesting book. Been digging into all kinds of stuff, man.
I've been reading The Psychology of Money. It's 20 short stories about people's relationship with money, and it talks about compounding gains. One of the stories is, Warren Buffett's not the greatest investor of all time, but he's just been doing it for the longest time. He started at like 10 years old, and he compounded 22% annual gains for 80 years or 70 years, whatever it is. And vast majority of his money was made after the age of like 65. Now he's 85, and he's worth 85 billion, whatever it is, and maybe less over the last couple of weeks. But 90% was made after his 55th birthday or 65th birthday or whatever it was. So it's just compounding. He's not, there are people that have had sustained careers of 65% annual returns for 20 years, but they didn't do it for 80 or 70.
It's fascinating because that book, The Warren Buffett Way, when I was a kid, really impacted me. And it showed all the richest people in the world, all of them, and all of them, their wealth put on a chart is a hockey stick chart. Very slow, very slow, very slow, very slow, very slow, very slow. And then bam, it just shoots up, know?
Yeah.
And I feel, like for me, I've been doing this 12 years now. I'm 28, turn 29 next month, started when I was 16.
Yeah.
And, there's been ups and downs for sure, but the consistency of showing up, it's like, dude, eventually something's got to give. And it's funny because, like, I feel like the past, it's been such a grind, it's funny. Like sometimes in there, you're like, will this ever pay off? But I got the past year has just been easy, like exponential growth for me. Just everything started falling into place that I had been putting in place forever, and that's, boy, when it finally starts hitting, you're like, oh my gosh, it can happen,
I love this. Chris Lyle, hold on. Chris Lyle got me this thing. I quoted this one time, and Chris Lyle got it for me. I got to hang it up. It says, opportunity is missed by most people because it's dressed in overalls and looks like work.
Yeah.
You just got to put in the process, got to do the hard work, and then it comes because you've done a lot of hard work. And I think Buffett that's the mantra of Buffett. He's done it for 70 years. It's not that he was, sure, he's smart. Sure, he's the guru. He's the Oracle of Omaha, all this stuff. But he's been doing it for a long time. And Chip Gabarino, who I interviewed earlier, was saying the same thing. When he started Hodges Bend, when he started Topeka Coffee, I don't know if you know. Do you know Chip?
No, I don't. I go to Hodges Bend and Topeka and everything.
Great guy. He's, he said he was willing to take less risk at the time. He was doing more of the work himself. And as he's grown, as Lowood opened, as Saturn Room opened, all these other facilities that he's got. And then as he's developed his real estate portfolio, he's willing to, take on bigger bites and more risk. And that only comes, that hockey stick thing comes because at some point you build enough that you can risk more, because if you lose it, you still have a sustainable lifestyle, right? You don't need, in Buffett's case, super fancy cars or this or that. You just kind of live beneath your means, and then you have it. Boom.
Yeah. When you have no resources and you are resourceful and you're making shit work with nothing.
That's entrepreneurship.
When you have resources, like when you finally hit that point where you have resources, it's like you're so good at decision making at this point that it's just bam, 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 and that's how I feel. I went to an auction the other day and bought a house. I wasn't even planning on buying when I went to the auction.
That sheriff's auction or like Mr. Ed's?
I can't fully expose because this is my honey hole, okay? But I was at this auction and I was like, bam, made it happen. I wasn't even planning on buying the property. But that's because, like, where I'm at, I have the resources, so I'm comfortable with that. I know it's not going to add any stress to my life. And on top of that, I know everything so well. Like, if somebody tells me a general place of a house, I know generally.
Sure.
I know what it's built like. I know, so many details about this property before I even see it. I can make a decision sight unseen a lot of the time, And this property, I knew it was built in the 80s. I knew, okay, built in the 80s, I'm comfortable with the electric, plumbing, HVAC, all that stuff. Well, HVAC's probably got to be replaced, but roof probably needs to be replaced. But it's a slab foundation because I know where it is. So I know these things, and I'm there and nobody else is bidding on it. And I'm like, oh, it's going at a price better than I thought. Bam, bam, you know.
How much did you pay?
I paid $75.
Okay.
And I go walk it, and I'm like, oh, this is cake. It's an easy flip.
Yeah.
Because I've been doing a handful of flipping. It's an easy flip, mostly cosmetic stuff. You know, we're going to replace the cabinets, but like that's probably the most serious thing we're doing. And I'll easily turn $50,000 off of it, you know.
And so you can't go broke making a profit.
Yeah, it'll be a cakewalk. So, and that's another thing is like my margins, because I had to operate so tight for so long. You know, I mean, most of the time I'm all in at 65-70% of after repair value. So even if the market significantly crashes, I feel relatively safe.
I love it. We're here talking to Corbin Marcotte, owner and principal broker at the Investors Broker, a guru, a font of knowledge in the local real estate market. Corbin, we really appreciate you being here. Where can people find you?
For sure. There's the Investors Broker on Facebook, tibrealty.com. Those are the main setups.
Phone number?
So.
Can people reach you by that old phone system?
Yeah. You know, I'll warn people. I'm at the point where I don't answer in the evenings or on the weekends.
That's great.
You're probably much better getting a hold of my partner. And often when people reach out to me, I defer them to my partner.
Perfect.
But 918-694-0508 or my email's Corbin, Corbin, @tibrealty.com.
I love it. Corbin, thank you so much. We appreciate you spending some time with us.
Yeah, great.
Take care.
Thanks so much, Matt.
Thanks for listening to the Same Day Podcast. Tune in to a new show each week and be sure to subscribe to get future episodes.